What if I told you that a single metal could bring down the entire global financial system? Not gold, not oil, not even Bitcoin. I'm talking about silver. In the past few weeks, something unprecedented happened in the silver market. The price skyrocketed to $122 per ounce. That's an all-time high. Then within just 48 hours, it crashed to $80. But here's what nobody is talking about. This wasn't a natural market correction, this was a coordinated operation, and the reason behind it is terrifying. A leaked letter from the 2026 Davos meeting has surfaced. The title of this letter? Sell Everything. This document reveals that powerful banking institutions are facing insolvency. They're trapped in massive short positions on silver. 200,000 contracts, to be exact, and these contracts are due in March 2026. If silver stays above $75, these banks won't just lose money, they'll collapse. And when they collapse, they'll take the entire financial system with them. Today, I'm going to walk you through exactly what happened. Why silver became the most dangerous asset in the world. How the elite manipulated the market in 48 hours. And what this means for you, your money, and the future of global finance. This is not conspiracy theory. This is documented market manipulation on a scale we've never seen before. By the end of this video, you'll understand why they desperately need silver to crash, and why they'll do absolutely anything to make it happen. Let's dive in. To understand what's happening now, we need to go back to November 2025. Major banks had been shorting silver for years. When you short an asset, you're betting that the price will go down. In November 2025, these banks held massive short positions. We're talking about 200,000 contracts on the CME. These contracts were supposed to be settled in November. But there was a problem. Silver prices weren't cooperating. So they kicked the can down the road. They moved their settlement date from November 2025 to March 2026. Silver isn't just a precious metal anymore. It's essential for solar panels. It's crucial for electric vehicles. It's necessary for 5G infrastructure. And here's the kicker. We're running out of it. Silver miners can't keep up with demand. Stockpiles are depleting. By early January 2026, silver hit $100 per ounce. The banks were sweating. That's when the Davos meeting happened. Every January, the global elite gather in Davos, Switzerland. The 2026 meeting was different. Behind closed doors, a crisis was unfolding. The message was clear. If silver remains above $75, the banking system will collapse. Because these banks don't have the capital to cover their short positions. They're leveraged 30-1. The letter stated something even more disturbing. It said that if silver continued to rise, public confidence in the banking structure would be lost forever. When people lose faith in banks, they withdraw their money. When they withdraw money, banks fail. It's a domino effect. So they made the decision. Crash the market, save the banks, deal with the consequences later. On January 28, 2026, silver was trading at $120 per ounce. Investors were euphoric. They were wrong. What happened next was a masterclass in market manipulation. Within 48 hours, silver crashed to $80. How did they do it? First, they implemented emergency margin requirements. The CME forced traders to put up more collateral, causing automatic liquidations. Second, they dumped massive quantities of paper silver onto the futures market. Hundreds of millions of dollars sold in minutes. Third, they coordinated with the media. Suddenly, every major outlet was running stories about the silver bubble bursting. Fourth, they triggered stop-loss orders. When the price dropped, automated selling kicked in. Fear spread like wildfire. But while the price was crashing, physical silver demand was surging. Coin dealers sold out. Premiums jumped to 40%. This tells you everything. The paper price crashed, but real silver was scarce. The disconnect had never been wider. Smart investors bought physical, but for retail investors leveraged in futures, it was a disaster. Fortunes were lost, dreams shattered. The sell everything strategy worked, but actions have consequences. This crash triggered side effects even Davos didn't anticipate. The stock market entered a correction. Tech stocks got hammered. High-growth companies lost 30, 40, even 50%. The VIX spiked to levels not seen since 2020. Cryptocurrencies also suffered. The digital silver narrative collapsed. But the most concerning side effect was psychological. People started connecting the dots. The leaked Davos letter became public knowledge. Trust in financial institutions eroded. A survey showed only 32% of Americans had confidence in banks, an all-time low. And here's the irony. By crashing silver temporarily, they may have planted the seeds for an even bigger rally. Let me remind you of something crucial. Those 200,000 short contracts don't just disappear. They're still there, and they're still due in March 2026. That's less than 4 weeks away. The banks bought themselves time crashing the price to $80, but 80 is still above the $75 danger zone. So what happens in March? The banks have 3 options. None of them are good. Option 1, cash settlement. But this exposes they never had the silver. It confirms the paper market is a fraud and destroys confidence forever. Option 2, roll the contracts forward again. But regulators are watching, investors are suspicious, it's getting harder. Option 3, crash silver again. Raise margins. Dump futures. But it worked once. Will it work twice? Investors might not fall for it again. There's a 4th option, the nuclear option. Government intervention. Suspend trading, price controls, like in 1933 with gold. But they can't control physical silver in your possession. If you own the metal, they can't manipulate its value when it's in your safe. Let's zoom out. This isn't really about silver, it's about control. For decades, institutions have suppressed metals to prop up fiat currency. If gold and silver rise, paper money loses value. Silver is dangerous because it's also industrial. You can't print physical supply. When industrial demand is high, shortages become real. That's when manipulation breaks down. We're seeing premiums at historic highs. The paper market pretends silver is abundant, but the leaked Davos letter confirms the emperor has no clothes. It's a fractional reserve system. This implies all markets are manipulated. Gold, oil, stocks, high-frequency algorithms and central banks control the prices. But manipulation has limits. Reality catches up. Supply and demand always win. Silver is reaching that inflection point. The manipulation is too expensive. The risks too great. Something has to give. And when it does, the revaluation will be spectacular. So what should you do with this information? How should you position yourself? First, understand that we're in uncharted territory. The financial system is more fragile than most people realize. Second, consider owning physical silver. Not to get rich quick, but as insurance. When paper assets fail, tangible assets retain value. Third, be prepared for volatility. The banks will fight to suppress silver. There will be flash crashes and fear campaigns. Fourth, diversify your assets. Don't put everything into silver. Hold some gold, cash, maybe Bitcoin. Spread your risk. Fifth, educate yourself. Read the data. Learn to spot manipulation. Don't trust banks to have your best interests at heart. Sixth, be patient. This situation won't resolve overnight. March 2026 is critical, but it's a multi-year process. Finally, protect yourself legally. Know the regulations in your jurisdiction. Keep receipts. Document your purchases. The most important thing is to think independently. Don't rely on mainstream media. Do your own research. Let me bring this all together. Silver hit $122, then crashed. This was a coordinated operation to save banks from insolvency. The banks are short 200,000 contracts due in March. They need silver to crash to avoid collapse, but they're fighting reality. The current system is unsustainable. The manipulation is becoming obvious. The cracks are widening. What you do with this information is up to you. You can ignore it, or you can take steps to protect yourself and your family. Before we finish, we need to look at history, because this isn't the first time the silver market has been rigged to save the establishment. Go back to 1980. The Hunt brothers, Nelson and William, tried to corner the silver market. They bought physical metal, huge amounts of it. The price exploded from $6 to $50 per ounce. The banks and shorts were losing billions. They were on the brink of collapse. So what did the regulators do? Did they let the free market work? No. They changed the rules in the middle of the game. The COMEX introduced Silver Rule 7. It prohibited buying. You could only place liquidation orders. You could only sell. With no buyers allowed, the price crashed instantly. The Hunt brothers were bankrupted. The establishment was saved. Mark Twain said history doesn't repeat, but it rhymes. In 2026, it's rhyming perfectly. The only difference is the players. Then it was individuals going long. Now it's banks going short, but the tactic is the same. Change the rules when you're losing. But they forgot one thing. In 1980, industry didn't need silver for the internet or green energy. Today, they do. They can't print physical metal. This time, the squeeze isn't artificial. It's fundamental. And no rule change can solve a shortage of atoms.